Today, we saw the S&P 500 and NASDAQ coming up towards their trend line. However, the Fed shocks the stock market once it made this announcement. Now, when we come over and look at the fear and greed index right now, we are sitting at 28. Again, we're on the lower edge of fear, and we've been spending an awful lot of time down in these areas. Then we get the most recent investor sentiment survey. What do we see? The most bearish reading we've seen in quite some time. Look at the bullish reading, only 25.4%. One of the lowest readings we've seen in quite some time. And look at the bears. They've jumped all the way up to 40.6. Now, when we look at how the indices fared across the board, the Dow was down 68 points. The NASDAQ was down 172 points. S&P 500 down 12.57, and the Russell 2000 up 0.47. We look at advancing issues versus declining. We had 58% of issues advancing on the day. And think about that. The market was down and more issues were advancing than declining. Even when we come over and look at the sectors across the board, a majority of sectors were in the green. The only three sectors in the red were technology, consumer cyclicals, followed by communication services. Now we look at a chart of the SPY real quick. Notice we're down 0.19%. Then we come over and look at RSP. RSP was actually up 0.79. And we can basically think that to the fact that stocks like Apple absolutely getting destroyed today. We look at Nvidia, also down on the day. We take a look at Google, also in the red today. Then we look at Meta, also down today. So a lot of the Mag 7 stocks were in the red. Tesla down 14 points, having basically an inside day. However, before we come over and take a look at what the Fed had to say today, notice there's only 12 more days left until the next FOMC meeting. And then we scroll on down, we can see right now the market's pricing in a 97.3% chance the Fed is going to do nothing at the next FOMC meeting. However, when we come over and we look at the odds of rate cuts, we can see right now the market's not pricing in another rate cut all the way until June of this year. But then we look at what Goldsby had to say today. Goldsby says he feels more comfortable that labor market is stabilizing. And let me know in the comment section down below, do you guys think the labor market is stabilizing? Because today we had another round of weekly unemployment claims. They rose once again to 217,000, forecasted 210, previous reading 203. To me, that doesn't really seem like it's stabilizing. Then today, Waller also came out and said the Fed may cut rates sooner and faster than expected if disinflation holds up. And think about this. Why would we have disinflation? Or could disinflation actually turn into deflation, aka the economy starting to slow down? Now, when we come over and look at the S&P real quick, the SPY basically rejecting right off the upper trend line. But the real story today was once we had the news out today, the dollar index started to make its move lower. And it wasn't only the dollar moving lower. We look at the yields today. Yields also today was on the decline. Once again, we can see the yields starting to pull back. Then we take a look at the precious metal gold. Gold today was up right back near the swing point. And now, maybe just maybe, we can make the case that we have this A to B equals C to D pattern. And notice that would complete right up here at new all-time highs at about 2,815. Now, jumping back over and taking a look at the SPY real quick, we came right up to that declining trend line today. And let's not forget, we have that large gaping gap right below us. MACD indicator still has not crossed up on the daily chart. However, when we come over and look at the 4-hour chart, the MACD indicator did cross up. So is this going to be nothing more than a head fake and basically trying to trap the shorts at this level? And what I mean by this is the rejection off this trend line. Is this trying to entice traders to go ahead and short? Then tomorrow or early next week, we're going to see the market rocketing up through that trend line. Keep in mind, one of the targets to the downside is going to be this large gaping gap below us. Then as we come over and look at the 30-minute profile, what did we say yesterday and today was likely going to occur for today? A D as in dog shape profile. And a lot of traders got chopped up. Today on the live stream, it was a great day out there. And if you guys don't want to miss the next time I go live, make sure you subscribe and you have the bell notifications turned on for all. But today we did not make it down to one of my lower targets, which was essentially the low from yesterday. We did not hit that target. Also, the MACD indicator is crossed over to the downside. Then as we come over and look at the 4-hour chart for the futures markets, notice we have this huge minus development area, and we may be on our way to making it down towards that area. If we go ahead and we measure our Fibonacci retracement from the swing low all the way up to the swing high, notice the 38% retracement is right on the edge of that minus development area. That's going to be anywhere from 5949.50 down here to about 5918.50. That is going to be a likely target location. And notice the 50% level is dead smack in the middle of that zone. Then when we dive down, start looking at the daily profiles. Now, if you like a way to support the channel at no additional cost to yourself, check out the 3 prop firms that I trade with: Apex Trader Funding, My Funded Futures, and Take Profit Trader. Right now, you can get the best deal out there using the promo codes and the links down below. Then when we dive down, start looking at the daily profiles. Today, I was hoping both the S&P and the NASDAQ would hit the P point. Later in the day, the NASDAQ did hit that target, which we'll talk about here in a bit. But notice that huge minus development area. Now, if we do start breaking through the bottom of it, which is the minus development area we talked about off the weekly chart, then I do want to focus on this little consolidation that we had right up here for a potential target at about 59.05.5. Now, when you look at today's profile shape, how'd the profile basically shape up? A D as in dog shape profile. And today on the live stream, traders were saying, Mike, how do you trade basically a back and forth chop fest day? And one of the things I said was knowing when a chop day is likely going to occur makes it a lot easier out there. Now, if you notice, we are closing below value area low, which really comes in at a price point of about 59.80.00. Now, this is going to be a potential target for tonight. Now, within the next 1 to 2 days, highly probable we will come back and test that area. Why? We closed outside of value, which means within the next 1 to 2 session, highly probable we come back and visit that level. And the only question I have is, do we come down into the minus development area first and then reject out? On the live stream, we talk about this all the time. The first time we come into the minus development areas, I expect either a bounce back out of that area or for the market just to chop and go sideways up in that area. Now, if we do come in this area and we start to bounce up, that would be a nice juicy target to the upside. Keep in mind, the point of control is all the way up here at 59.86.00. with value area high being up here at 59.97.00. Now, when we look at the economic calendar for tomorrow, very light on economic news. 8:30 a.m., we have the building permits. We have housing starts. Then at 9:15, we have 2 low impact news items: capacity utilization, along with industrial productions. Other than that, we have a clean slate for economic news for tomorrow. Now, let's take a look at the volatility index real quick. The VIX. We can see the VIX today late in the day started to spike up. VIX today was up 3%. Now, if you guys remember in yesterday's video, I said there's an 85% chance that either today or tomorrow, meaning Thursday or Friday, we're likely going to have an update in the market because the VIX was down more than 10%. And once again, that stat came in and really helped out in terms of analyzing the market for today. Now, as we come over and look at the QQQs real quick, you can see we basically gapped up above that declining trend line. Boom, rejected right back down. MACD indicator on the daily chart still has not had a bullish cross. Then on the 4-hour chart, we do have a bullish cross of the MACD indicator. However, we got to be honest with ourselves. Are we going to come down and basically fill the gap? Because right now, after hours, we can see the Qs are down another $1.50. And right now, in after hours, we're sitting right there at gap support. If gap support does fail, watch for the market to come all the way back down, potentially filling the gap at 505.04. Then as we jump back over and take a look at the futures markets real quick, notice we got that nice rejection down, but then if we go ahead and we look left, what do we have? A minus development area within the profile. We look over here to the right, we're coming right into a high volume node on the composite profile. Also, if we were to pull a Fibonacci retracement, swing low up here to the swing high, notice where we came to. We're right at the 50% Fibonacci level. Now, one of the areas we were talking about all day on the live stream was, I think we have a good shot of hitting this P point. However, I was really looking for the market over the next couple of days to come into this smaller minus development area. And what I mean by this is basically the edge of the minus development area from yesterday, then from the day before that, coming into the candle bodies. So we had a confluence, one, a prior swing high, two, which we broke out from and we failed to come back and test. And then two, we had the edge of the minus development area. Now, if you notice, we have a D as in dog shape profile, a little bit of an elongated tail on the top, elongated tail on the bottom, and we are closing miles below value area low. Now, value area low is really going to come in at a price point of 21,323.50. Point of control will be 21,398, and value area high is going to be 21,451. So that value area low, if we start to get a bullish bounce tomorrow, does make sense for a logical target to the upside. The question is, do we melt down more tonight before we start to get that bounce? Now, if you guys would like to learn how to better time your trades using audio, make sure to watch this video right here.